Good evening, everybody. My name is Jerry D'Ambrosio, Senior Instructor with VectorVest, and welcome to tonight's special presentation titled How to Heal a Broken Portfolio. Dr. Toledo has always said that watch lists are one of the most powerful tools in the VectorVest program, but unfortunately a little underutilized. Watch lists actually tell you more about yourself as an investor than you might think. I'm on the home page of VectorVest 7, and to access the watch lists, I'm going to come up to the top and the main toolbar, click on Viewers. Notice on the left-hand side is that watch list section. We have a number of pre-built watch lists in here for you to go through. We have cherry picking. You can look at Midas Touch stocks, dividend payers. We have a special watch lists folder. You can look at China stocks, NASDAQ 100 stocks, weekly options, stocks that have weekly options. So the watch list section is just a great place to go to track stocks, to take a look at stocks that you may not be aware of. Another function of the watch list is to keep track of your portfolio. You can enter in all of the stocks in your portfolio and essentially manage that portfolio right here from a watch list, and that's what I'm going to show you here tonight. I'm going to open up the My Watch Lists folder. There's already a watch list in there called My Portfolio. And once that loads, you'll notice it loaded 7 stocks. So I loaded these 7 stocks into this watch list. Let me show you really quick on how to add stocks to a watch list. Very simple. Just come up to the top in the Add Symbols box and just type in the symbol separated by a comma with no spaces. And hit the Enter key, and that'll add any stock you wish to that watch list. So again, we can manage our portfolio right here from a watch list. I'm going to click on this Stream button here and take the real-time data off, disable the real-time data, just so it doesn't distract us as we go through. I am using the real-time program here, so you do get ticking real-time data throughout the day. I'm going to click on Stream. That's going to turn off the data feed. And automatically, when you enter stocks into a watch list, it ranks them from best to worst. A watch list is automatically sorted by our master indicator, and that's VST. VST combines value, safety, and timing into a single comprehensive indicator. And let me go through what we see here quickly on this spreadsheet. You have the company to the left, the symbol, the exchange. O is for NASDAQ, N is for New York Stock Exchange. And if it has an X next to the exchange, it means it's optionable. The current price, the dollar change, and the percent change in price from the previous day's close, and then the value. And here is where we get into our core proprietary stock analysis indicators. Value is a measure of the stock's current worth. So with a price of $22.51 and a value of $32.24, we say that this stock is undervalued. The next 4 indicators are on a 0 to 2 scale. Above 1 is good, below 1 is bad. Relative value measures the long-term price appreciation potential. Relative safety measures risk. And relative timing looks at the short-term price trend of the stock. Again, all 3 of those indicators are combined to give us VST, again on a 0 to 2 scale. Above 1 is good, below 1 is bad. Relative value and relative safety are fundamental indicators. Relative timing is a technical indicator. Right away, you could look at any stock, not only in your portfolio or a stock that you're tracking, and analyze it very thoroughly using these core indicators here. So right away, we see that PCMI, it's the top VST stock in the list because the list is sorted by VST. It's undervalued. It's got excellent upside potential long term. It's a relatively safe stock. It's above 1. Again, RS measures risk. Above 1 means that's a safe stock. Below 1 means it's a little more of a riskier investment. And boy, is this stock rising in price. The RT is at 1.72, so the trend of the stock is currently up, and it also has a buy rating. One of the things, though, that jumps out to me anytime I create a watch list, especially of the stocks that I own, is the ones at the bottom. They have sell ratings. I'm sure this jumped out to you as well at first glance. The stocks at the top of this list, again, have buy ratings, have RTs above 1. These are your winners. These are the stocks that are currently making you money, and there's not much worry that you have to do moving forward at this time. Your work is needed at the bottom. With the stocks that have sell ratings, with the stocks that have RTs below 1, we know what that means. So if RT above 1 means the stock is in an uptrend, RT below 1 means the stock is in a downtrend. So let's now analyze the stocks at the bottom of this list. A watch list can be forced ranked using any indicators in this spreadsheet. And I haven't even gone through most of the spreadsheet here. If I scroll over to the right, it has all of our proprietary and industry standard indicators that you would see in the stock viewer. So watch list again is essentially your own little stock viewer. The watch list can be sorted with any indicator that you see. So one of the things that we like to do is sort our watch list or our portfolio, right, by relative timing. This is going to bring to the top of the list the stocks that are in the strongest uptrends and the stocks to the bottom of the list, the ones that are in the strongest downtrends. This again, folks, is where your work is needed. So just like we did with PCMI, let's begin to analyze it. Lending Tree, close to the bottom of the list, we know it has a sell rating. It's currently $88.18. We think it's worth $103.18. So that's good. So the stock is undervalued. It's trading below what we think it's currently worth. Relative value, remember this indicator? It looks at the long-term price appreciation potential. That's good as well. Excellent, in fact. Anything above 1.4 is excellent. However, if we look over to the relative safety rating, it's below 1. So it's a little bit of a riskier investment. Not only is it a little bit of a riskier investment, but it's also in a downtrend. It's got an RT of 0.76 again, and it has a sell rating. So pretty good stock, undervalued, good upside potential, a little bit riskier, but may not be the time to own this stock right now. It's got a sell rating with an RT below 1. Let's look at the next one, Big Lots. $44.50 current price, $69.89 value. So that's undervalued as well. Excellent upside potential long term. Another stock that's a little bit more of a risk, but falling in price as well with a 0.67 RT and a sell rating. And if we look at the two stocks below it, similar situation. Both undervalued, both have good upside potential, little bit risky, and both are falling in price as well with sell ratings. So this again is where your work is needed. One of the first things I said earlier was that a watch list could actually tell you more about yourself as an investor than you might think. What I meant by that is at the very bottom. This is an average. This is a watch list average of all the stocks in this list. The average price is $43.53. The average value is 52. So the portfolio itself is undervalued. Relative value is very good at 1.35. Overall RS is good as well at 1.09. However, look at RT. It's just above 1 at 1.05. So the overall trend, I guess you would say, of your portfolio is just slightly up. It's got an average VST of 1.17 as well. When you look at RV and RS, those are both fundamental indicators, and those folks help you determine what type of an investor you are. We actually have a special report. If I go to Views and go to Special Reports, we have a special report down at the bottom here called the Strategic Investment Matrix. And what we've done is we've categorized or classified the 4 different investment styles: prudent, aggressive, speculative, and conservative. That watch list average, if you remember, has an RV above 1 and an RS above 1. That puts us in the prudent category. High relative value, high relative safety. In other words, a prudent investor looks for favorable long-term upside potential. However, he or she does not want to take much risk. The aggressive trader, if we move over to the next quadrant here, the aggressive trader looks for relative value above 1, but relative safety below 1. He or she also wants the upside price potential, but is willing to take on a little bit more risk, right? With relative safety below 1, that's what that means. It's just a little bit more of a riskier investment. So this is a great report, a great matrix to help you really determine what type of investor you are. And if this is your portfolio and you have an RV and an RS on average above 1, it puts you into the more prudent category. That being said, what do we need to do with the stocks at the bottom of our watch list here, or the bottom of our portfolio, that don't line up with that general investment temperament? Again, this is where we need to get started. So let's graph the bottom 4 stocks here. Again, all 4 do not line up with our overall investment temperament. I'll right click, I'll view the stock graph, and I'll just take us to a 1-year graph. So we are looking at a 1-year graph, end of day data, and the layout that we're using is the VectorVest layout. Price of the stock is up here in candlesticks, the 40-day moving average is in magenta, and the RT of the stock down at the bottom. We can also put another indicator on. I really love this indicator, earnings per share. Earnings per share is what's driving the stock higher, and it's what's going to continue to drive that price higher and higher moving forward. Now, if we look at a 1-year graph here, remember the type of investor we are with that watch list. We're prudent. We don't really want to take a lot of risk. We look for the upside potential, but risk is an issue, and we're not willing to take on too much of it. Well, if you look at a 1-year graph of LendingTree, is this the type of stock, is this the type of price pattern that lines up with that overall temperament? I don't think so. We could see that the stock really over the last year has been moving sideways. Low RS also means higher volatility. It is an indicator, again, of risk, and it also measures volatility. And you can see that this stock is extremely volatile. Earnings is still pretty good. One of the things that you want to watch out for moving forward, anytime you own a stock, I'm going to give you now a few tips on when to determine to sell that position. There are general guidelines that you can follow to really help mitigate losses and protect profits. I'm going to come down to the bottom left, click on recommendation, and I'm just going to zoom in here over the last 4 months. So the stock had a buy rating. Again, not sure when you bought this stock, not sure how long you've held this stock, but just looking at the last 4 months, stock had a buy rating. Notice on this day, right around here, the end of August, the stock violated its 40-day moving average. That's tip number 1. Be aware when the stock's price falls below that 40-day moving average. And you can see it did that right about August 29th, after serving as nice support for about a month or 2 prior. Okay, so the 40-day moving average was violated at the end of August, came down, continued to move lower, came back up and retested that 40-day moving average. Once the price of the stock retested that average and then retraced from it, that 40-day moving average became resistance. What's also happening is the stock is transitioning from a buy rating to a hold rating. The relative timing of the stock now falls below 1 on September 19th. That's tip number 2. Be aware when the RT of the stock falls below 1. And that happened on September 19th. And just a day later, the stock finally got a sell rating, and that's tip number 3. A sell rating from VectorVest should be your last line in the sand. We've just talked about a few different situations or a few different ways to help mitigate losses and protect gains, and that sell rating should be your last line in the sand. Notice what's happening now. The 40-day moving average is sloping downward, and it's serving as very strong resistance here as the downtrend continues. Let's look at the next stock. Here's Big Lots. Okay, a little bit different, not as volatile, pretty much flat, also flat to down over the last year. Stock had a buy rating back here in April and March of 2016, had a pretty nice run. Okay, notice the dip below the 40-day moving average here in May. RT went below 1 as well. Stock never got a sell rating, so that line in the sand was not drawn during May and June of 2016. It has, however, signaled on September 23rd. So let me just zoom in here again. Let's go through those different situations. Price of the stock falls below the 40-day moving average. Notice too, during that uptrend, how that 40-day moving average served as a support zone. Actually, on that day as well, the stock transitioned from a buy to a hold, and the RT went below 1. Stock continued to fall, and then finally got a sell rating on September 23rd. One of the things that you want to be aware of too is it's still a good company. Remember, the RV was above 1. The stock was undervalued. Look at earnings. Earnings are steadily rising. There are bad times to own good stocks, and the situation that we're seeing here is one of those times. Let's look at the next one. All right, GameStop. Rising earnings, which is good. Not sure if this lines up with our prudent temperament. Stock is really channeling here, and it's been doing that for the better part of about 9 months. It just recently got a sell rating. Look back here when it first crossed below the 40-day moving average. RT crossed below 1. That would have been a really nice time to, at the very least, tighten up your stops and protect those gains. And finally, Lazy Boy. One of the things that pops out to me is earnings. Stock has rising earnings. Also fell below its 40-day moving average back here in August. Has stayed below the 40-day moving average and had gotten a sell rating on September 9th. Again, not a bad company, just going through a rough time right now. And this is what's hurting your portfolio, folks, these types of stocks. So we talk about how to heal a broken portfolio, and this is the way to do it. So what you want to do is you want to start from the very bottom and work your way up and eventually get rid of those 4 stocks. Another thing about the watch list average that I love is you're able to actually see an equity curve, an average price performance of all the stocks in this watch list. So if I right click on it, go to view watch list average, here's essentially the equity curve of all 10 stocks in that portfolio. Really solid earnings performance. Overall, over the last year, the average RT has been, for the most part, above 1, and the portfolio is higher now than it was 1 year ago. Let me close this down. So watch what happens to a few things when we start to weed the garden, as we say, or begin to heal this portfolio. I'm going to highlight those 4 stocks at the bottom, and I'm going to get rid of them. We should have sold them a long time ago, but now is the time, if we haven't done so, to start trimming the fat and begin the healing process. So I'm going to highlight those, and I'm going to right click, and I'm just going to go ahead and delete them. Okay, so the stocks that are left all have either buy or hold ratings. Now, Tyson Foods is one that we'll want to keep an eye on, right? It has an RT just slightly above 1, undervalued, excellent fundamentals, but right now, struggling just a bit. Actually, let's graph that one as well and take a look. Okay, so we're looking at the last year. There's a really nice solid earnings curve. RT, again, very close to crossing below 1, and the stock just recently broke below that 40-day moving average. We saw the charts on the stocks that we got rid of and what happened after these things occurred, after the transition from a buy to a hold, after a violation of the 40-day moving average, and after RT went below 1. So that's starting to develop right now. So Tyson is one that you really want to keep an eye on and start taking action as you see these things start to take place. What I'm going to do, we have 6 stocks. When you replace a stock, the first thing you always want to do is check the market. Make sure that the market is rising before you replace any stocks that you sell. For all intents and purposes, let's just say the market is rising, and I'm going to show you how to add a few more stocks to this watch list. So again, just type in the symbol, separated by commas, no spaces. And look at what that did. Let me take this date just back to yesterday. Look at what that did to the overall indicators, the averages of those indicators. RV went up, RS went up, RT went up to 1.4. With those 4 stocks that we got rid of, I think the RT was just slightly above 1, right? And watch this. Number 1, no sell ratings. Every stock in the portfolio meets our overall investment temperament. Now I know AOSL has an RS of 0.99, but it's rising in price with a buy rating, and if I right click on it, view the stock graph, that's the type of stock that a prudent investor is looking for. Solid earnings. Over the last year, the stock has gone from bottom left to upper right. RT has remained above 1 practically the entire year. So GameStop, Big Lots, those type of stocks, and the price behavior of those type of stocks don't really line up with the prudent investor. And finally, folks, watch what it did to our watch list average. Incredible. Bottom left to upper right, hardly any volatility at all. That has a lot to do with those high RS stocks as well. The RT has been above 1 most of the year, and earnings overall are still rising, which is, of course, the engine that's going to drive this portfolio higher. As long as the stocks in this portfolio continue to grow their earnings, you're going to see the same type of overall equity curve moving forward. Well, thank you, folks. I hope you enjoyed today's special presentation. Don't forget, if you ever have any questions at all about anything that we present here on a weekly basis or anything that you're having trouble with, please call our product support department. We're here to help you, and we look forward to working with you.